first, some foreclosure data. Foreclosures. How bad is the foreclosure market? How realistic is the stuff you hear from the doomers? Now, certainly the real estate market, I have reported many times, has been pretty darn boring for the last year. And I think we're going to see that continue for just a little bit longer. But I think it's about to unfreeze. And I heard a very, very interesting theory. Wow, kind of blew my mind this morning from Anthony Pompliano, and it was about the Trump administration trying to intentionally slow the economy. Yes, I know that sounds absolutely nuts, right? Why would any president want to do that? Well, I take that back. There are some that did want to do that for sure. But I don't think this president would want to do that. However, there has been a lot of pressure and a lot of talk about forcing the Fed chair out, forcing the Fed to lower interest rates, which would obviously speed up the economy. We all know that. And you probably saw, and we reported on the news about how Jerome Powell was being extremely defiant about that. And, I don't blame him, right? The Fed is supposed to be separate from the government, but whatever, right? And Richard Duncan, when I interviewed him in Bangkok live in person, you heard that just recently, he talked about the end run around the Fed, which the Trump administration could do. But here's another way. Here's another way they might be trying to do it, and that is to just generally slow the economy. We are going to have some bumps in the road, folks. Get ready for it. It's definitely coming. Trade wars, tariffs, chaos. It's a lot of stuff going on. But through it all, the most historically proven investment will be income property. And we just don't see any sign of any big doom and gloom, as you hear from some of the doomers, like Peter Schiff, who's been wrong since 1982. I didn't actually say that, but you heard me repeat it before. I was on this live stream with Peter, and he was talking away, and he sounds so brilliant. And he is a really smart guy. There's no question about it. But someone wrote in the chat, Peter Schiff has been wrong since 1982. And that's pretty much how it is with the doomers. They just underestimate the power of human ingenuity and the power of 8 billion people waking up every single morning thinking one dominant thought, which is, how can I improve my situation? And as they do that, they're going to create value in the economy, value for others. And it's just a beautiful system, the way that works, right? But here's some foreclosure activity, and it is still extremely low. In fact, it got even lower than extremely low. If you're watching on video, you see this chart, and back to the Great Recession, foreclosures were through the roof. There was so much foreclosure activity. It was unbelievable. And this chart that I'm showing on video looks like just a pointy chart at the top of the Great Recession. And since then, foreclosures have been pretty much just declining. During the COVID era, they declined even more to incredibly low historical lows that even if you go back much further, they were never that low. And there were the foreclosure moratoriums, right? We know about that, the eviction moratoriums, the foreclosure moratoriums, that all happened. But we didn't really need that at all, because think about it. Think about the COVID era and all of the doomers and all of the doom and gloom you kept hearing. You saw it all over YouTube. In fact, my buddy Ken McElroy made a video. He said, write this year off. And so many of you asked me about that video because Ken and I are business partners. And he was super negative about the whole thing, as were so many other people. And so many other people were saying, I've got cash, I'm going to pounce. This is going to cause an immense real estate crash. And it didn't. All of those people missed out because it went the opposite way. The real estate market boomed. And one of the reasons was that they underestimated the government and the central bank response to the crisis. And as they underestimated that, the market went through the roof and we saw massive appreciation. We all know the history, right? But think about it. If you are one of those people trying to time the market, you would have just completely missed out on that. In fact, you would have missed out on a lot of good cycles. But that said, we don't even depend on cycles. What we depend on is just reliable investments that produce a good overall return on investment. And if you want to know how to calculate those, go get that free video at jasonhartman.com. It's right on the front page. And look at the performas in the properties section of jasonhartman.com. And you'll see that even with very conservative assumptions, they perform at above 20% annually, because income property, of course, is this beautiful multidimensional asset. Unlike other assets, you make money in many more ways. And so back to the foreclosure activity here and how everyone just screwed up on their predictions about what would happen and about the way they dealt with it and the way they were keeping their powder dry and waiting to time the market. And they were just wrong. They just totally missed out. Over and over again, this happens throughout history. And so this foreclosure activity went up a little bit as the moratoriums went away after COVID, right? There was a little bit of an adjustment, but it's still the lowest foreclosure activity on this entire chart that dates back over 20 years. And now foreclosure activity even went down slightly in the last month. So again, all of the doomers, they just miss out all the time. And nobody ever counts what they miss, right? Because that's not the way the human mind operates. You can't hear the dogs that don't bark. Sure, everybody talks about the one that got away once in a while, but a lot of people just don't talk about it at all because, well, they're kind of embarrassed, honestly, that they missed out and they didn't have the confidence to do things that would have yielded great returns for them.